Welcome and thank you for joining today's webinar, U.S. Payment Solutions Cost Management, presented by Trucera. My name is Jeremy Krall, and I will be your presenter today. Just a couple of things to get us started. We will be going through a decent amount of data, and I'll be going through some of it relatively quickly. However, today's webinar is being recorded, so we'll make that available so you can go back later if you need to pause on any particular screen to grab that data. Before we get started, if you haven't already, please be sure that you check us out online at trucera.com. That's Trucera.com. We are actually not here to sell you merchant services today. I know a lot of the calls and emails and texts that you get day in and day out are from the various companies that provide and sell merchant services, and that's actually not why we're here. But we are here to deliver knowledge, insider information, details on how you can actually save money with your payment processing, and actual truth in payments. That's our tagline. Today we're going to talk about how payment industry makes money, where you can negotiate fees, where you can't, give you some information that the industry really doesn't want you to know, and learn how you can use that information and the expertise from Trucera to actually save money in your payment processing. Just a little bit about Trucera. We are a privately held payments consulting and technology firm based here in the U.S. And I founded Trucera really out of a belief that there is a severe lack of truth within the payment space. There are a lot of things that merchants do not know that if they did could improve their payments efficiency and reduce their costs. There are a lot of things that payment processors and banks and payment integrators could do to improve the transparency and pricing programs that they provide into the merchant base. And so that's really what we believe in, is truth in payments. And we serve a number of different verticals and industries. But by and large, if your business accepts payments, we can probably help. Specific to some of the services that we provide to our merchant clients, we really assist with a full breadth of payments consulting, processor management, payments technology, and analytics. So really what that means is we can help merchants understand where their payment processing costs are higher than they should be today, and really assist in managing those costs relative to the cost of the payment themselves through Visa, MasterCard, debit card interchange, the payment processor fees, and then the technology that's actually delivering those payments at the point of sale into the processors, and then the back-end analytics to really pull all of that together, ongoing monitoring, and provide the intelligence to make sure that those costs are being managed appropriately and that the technology required for the merchant's operations is meeting their needs. For today's agenda, basically we're going to start by following the money. Talk about where payment fees are being generated, where your payment fees are going, how that revenue flows. We're going to explain why you're probably paying more than you should be today, and some strategies for how Trucera can help with that, and then really some actionable steps. There's a lot of information here today that you can take action on your own relative to reducing your payment costs, and of course Trucera would be available to assist as well. In our quest to follow the money, we have to start with the payment processors. As you'll see, here's a few examples. The payment processors generate many billions in revenue annually. And of course, the card brands themselves generate a lot of revenue as well, which is great if you're a stockholder of these companies. It's not as great if you are a merchant paying the fees that generate these revenues. From a merchant perspective, when we think about banks, and especially the big banks, we think of them primarily as card issuers. Of course, banks provide a number of services, but for merchant processing and the interchange fees that are paid, the majority of that goes back to the banks that issue the cards. And so when we look at the revenue of some of the largest issuers, you'll see there's a decent amount of revenue here as well. So if we look at the total processing fees paid by merchants in the U.S., it's in the $88 to $90 billion range currently, and that is growing. Now today, Visa and MasterCard represent the largest chunk of that in terms of cost. And one of the things that really jumps out here, if you look at the PIN debit expense, it's 3.4 billion, which is about 4% of the total. What's interesting is PIN debit eligible transactions represent about 66% of all payments in the United States. And so one of the reasons that this fee is so high is because those transactions are predominantly being processed into the Visa and MasterCard brands as opposed to through the debit networks. And that's part of what we'll cover in the rest of this webinar. So if we look at the U.S. market from a theoretical perspective, meaning that every merchant and every transaction was routed optimally, so those eligible debit transactions are processed down a debit rail, and the credit transactions have all required information at the transaction level to achieve the best qualification through interchange, we get to a point where the U.S. processing fees could actually be reduced more into the 78 to 80 plus billion dollar range. So you're talking about essentially a $6 to $10 billion difference, and that's an annual number. So at this point in the presentation, you may be thinking that we here at Trucera are anti-capitalist or are saying that there's not value being driven by the banks and the processors with all the money that they're taking from you. But that's not actually what we're saying. Everyone has obligations. The card brands, the processors, the banks, the technology providers, they all have obligations to their companies and their shareholders, and there's nothing wrong with that. But you have obligations to your business as well, to your management, your customers, your stockholders, your employees, to yourself. The thing you have to realize is large portions of merchant processing today are commoditized. It's no different than electricity or water. And if you're paying more for your electricity or your water than the tenant next door, you're probably losing on your margin. Payment services is no different. It's a battle, and you have to be prepared to win that battle. If you choose not to fight, you'll lose by default. Now, if we look at who is fighting that battle most effectively and who is paying the lowest cost fees for their payment processing, it may come as no surprise to you that the larger merchants are paying less than you. Now, this is largely due to the amount of fees that are charged by the processor. If you look at this breakdown, really you'll notice that in the dark blue, the network and interchange fees are really only marginally different across the different tiers of merchants from largest to smallest. But when you look at the fees that the processor charges, that will actually vary quite significantly across the different types of merchants. Now, if we look at average processor fees based on merchant size, we see a bit of a hockey stick here. So the largest merchants really represented on the left side of the chart pay the lowest fees to their processors. It's not unusual for that to be 2, 3, 4 basis points. I've got it marked here in the 2 to 8 basis point range. The middle market will scale up from there up into the 12, 15, up to 30, 45 basis point range. And then really when you get into the smaller merchants and the micro merchants, that's where the processor margins really take an uptick into the 45 to 100 plus basis point range. Another way to look at this, if you break it down into an absolute cost per $1 million in process volume, we can see that small and medium merchants pay the most. They will pay their processor on $1 million in transaction volume somewhere between $4,000 and $13,000. Middle market merchants are going to be more in that $1,500 to $4,500 range, and then the largest merchants are only going to pay a few $100s on that same $1 million in process volume. As hard as it is to believe, what that actually means is, as a middle market merchant, your processor may be charging you 10 times what they do a larger merchant. And if you're a small and medium merchant, you're likely paying fees closer to 30, 40, even 50 times higher than the larger merchants that you may be competing against. So let's take a moment to look at a few payments myths that you may have heard, especially if you've tried to actively manage your merchant program. You may have heard that you have the best rate. This is simply rarely the case. Processing fees across the industry are being compressed due to the commoditization of the delivery and the increased competition. So it is highly likely that a better rate program is available than the one that you're on today. You may have heard that you will save money by switching your processor. This is rarely the case. What you may have found if you've been in business very long and have tried this is that either you didn't save money or you only did in the short term and then your rates changed and rose over the long term. You may have heard that debit cards are regulated, so it doesn't matter if you process with a signature or through the PIN networks. This is simply not the case. Debit cards are regulated by the Federal Reserve, and the interchange fee that is charged on any given transaction is regulated. However, there are fees on top of that from the payment networks themselves that are unregulated. So with PIN networks, you have a switch fee, and with the credit brands, you have dues and assessments, which are 11 to 14 basis points. So there are fee impact differences depending on how you process that transaction. There's chargeback implications as well. So it does matter how you process your transactions at the point of sale. You may have also heard that you can't do anything about interchange expenses. This is patently false. Interchange costs represent anywhere between 60 and 95% of any given transaction's total fee, and there are strategies that you can implement to capture lower cost interchange rates than what you may be doing today. So how do these myths persist? One of the reasons is the payment processing ecosystem looks a bit like this. It is confusing, and it can be to many merchants. It wasn't that long ago that having leading technology meant you had a credit card terminal connected to the internet instead of a phone line. But over the past decade, the ecosystem has evolved quite a bit. And this has led to confusion that leads many merchants to pay more than they should. Confusion creates revenue. I have a question for you. Do your statements look like this? When you open your bill from your payment processor, do you look at it and think it's in another language? Do you give up, put it in the drawer, pay the bill, and consider it a cost of doing business? Do you know that there's actually secrets to be unlocked here that tell us what you're doing wrong? Maybe what your employees are doing wrong. Where you can capture debit card rates over credit card rates, where efficiencies can be achieved. You just have to know what to look for. But something else is going on as well. Another question for you. Did you know that regulated banks have the interchange fees on their debit card payments capped by the Federal Reserve? The average regulated debit card fee is less than 23 cents per transaction. Something else that we know, about 2 in 3 payments are debit cards in the United States. Yet only about 1 in 5 of those payments is actually processed into the debit networks. So you have to ask yourself, are you one of those organizations representing the other 80% that are not effectively leveraging these programs and the debit networks to capture the lowest cost available to your organization? So let's take a little deeper dive into debit card pricing. Nationwide, the industry average debit card costs 30 cents to process in interchange. Now that breaks down to a sub 23 cent transaction for regulated debit cards and about 42 cents for unregulated. Now, if you're not familiar, banks greater than $10 billion in assets are regulated by the Federal Reserve for their debit card transactions. The smaller banks are not, which is why the fees are different. So I've zoomed in on the previous chart here to give you a bit more detail on single message versus dual message and how that impacts pricing. The main thing to understand is that single message means the transaction goes through the PIN debit networks. A dual message transaction goes through the credit networks, Visa and MasterCard as an example. And you can see here that that matters relative to the price that you would pay, especially on an exempt transaction, meaning an unregulated bank. So we can see regulation began in late 2011, and that's where the regulated payments really reduced in cost, starting really in 2012 forward. But if we look at that specifically on what they cost for a dual message versus single message, what we see is anything going through the debit networks based on national averages is going to be 23, 24, 26 cents based on whether it's regulated or unregulated. But if that same transaction for an exempt bank goes through the credit networks, the national average shows that it is a 51 cent transaction. So it's literally double the cost of if you brought the same transaction through the applicable debit network. So what this means is for the vast majority of merchants, routing transactions to the debit networks will save you money. Now, like any good rule, there are exceptions. For example, very small ticket merchants, let's say vending or something in the $5 average transaction range, you may not benefit from leveraging the debit networks. But for the vast majority of merchants, there are cost savings there to make sure that you route as many transactions as possible to the applicable debit network for that customer. So if we take a look at nationwide payment levels, what we see is in excess of 100 billion annual transactions representing about $6 trillion in payment value on credit and debit cards. Now, interestingly, about 66% of the transactions or 70 plus billion payments occur on debit cards, and that represents about 44% of the volume. Now, where there's an issue in today's market is that only 13% of all transactions and 9% of all volume for debit eligible transactions actually process through debit networks. The rest of it is going through Visa and MasterCard, which is why the Visa MasterCard debit number is so much higher than the PIN debit number. Now, it's also interesting that we do see stark differences in the average ticket. You may have seen this in your business. The average credit card transaction is about $93. The average debit card transaction is $37. And we're seeing that actually drop nationwide average ticket, primarily because consumers are using both credit and debit, but more so debit cards for lower and lower transaction amounts that previously they may have used cash for. So if we look at these same numbers and what optimal routing could do in the US, essentially what we would be doing is trying to get to a point where we shift the volume from Visa, MasterCard debit into the PIN debit networks. Now, if we look at a total effective rate with perfect processing everything through the lowest cost network, here's some examples. And what you really see is a 1% up to 1.8%, really varying based on the average ticket. But for most merchants, if you route your transactions optimally, that 1.3 to 1.6% range is absolutely achievable for most merchants. So at this point in the presentation, I always like to take a crack at doing a little mind reading. You're probably thinking, this is too good to be true, or there's no way to get my costs that low. Or maybe you're thinking it's time to put some focus on what your total cost of acceptance is. Or possibly you're just skeptical. Irrespective, we will continue. Next, I want to show you where the billing breakdown may be happening between some of the players in the payments ecosystem. So remember this slide from earlier? I'm going to break it down a little bit further to make it easier to understand. So we'll start with some of the main players that you're familiar with. Yourself, your cardholder, payment gateway or point of sale provider you may be using, your payment processor, their acquiring bank that you may or may not have ever heard of, the credit card networks, so this would be Visa, MasterCard, all of the debit networks, Discover, Amex, etc. And then we have the issuing bank. So that would be the bank that issued the customer's credit or debit card. Now there are various resellers at different levels for payment services. So there's a reseller level of independent sales offices, or MSPs as they are sometimes called, that sits here. There's a reseller level of independent software vendors or dealers, value-added resellers, that sits here. But for the purpose of conversation, I'm going to primarily leave these folks out of the explanation here because we want to talk about where debit card regulation fees flow. As a starting point, it's important to understand that with any pricing, and especially regulated debit card interchange fees, what is regulated is the price paid between the issuing bank and the payment processor. So the first question you have to ask yourself is, when was the last time you received a bill from an issuing bank? The answer is never, because that relationship doesn't exist. As a merchant, of course, you receive a bill each month from your payment processor, or possibly from one of their resellers or your payment gateway. So when we look at the interrelationship between these players, what we know is that the pricing for regulated transactions is fixed between the issuing bank and the payment processor. However, the relationship between the payment processor and the merchant is unregulated. So what that means is there's no obligation by the payment processor to pass through the lower cost debit fees from the issuing bank to the merchant unless that's covered by a contract, which many times it is. But for some merchants, they may not see those savings. If you're on a flat rate program or a tiered discount rate program, and let's say you're paying 2 or 3% for every payment, if you take in a $100 debit card, you're going to pay your payment processor $2 or $3 for that transaction, while they're going to pay the issuing bank about 25 cents for that transaction. So when you ask the question of will the merchant leverage the regulated debit card pricing from the payment processor, it's yes, no, or maybe. It's also worth noting that the interrelationships between the credit card networks and the payment processor are also unregulated, and those fees can be variable. So as you can see, there are a number of complexities in managing payments to make sure that the end merchant pays the most competitive rate possible relative to debit card fees, credit card fees, what the payment processor is charging you, all of the above. So if you look at this circle, this is really where Trucera lives. We can help with all of these issues in cost management. So now I'll shift over to a few details on how Trucera can help. Obviously, your transaction volume is part of the equation. If you're a smaller volume merchant, there's less that we can do for you in terms of cost savings. The higher volume that you have and the more transactions that you process, the higher likelihood that Trucera can assist in making a substantial difference to your bottom line. So a few details about some of the areas that we look at when we take a holistic approach to a client. We really want to help them reduce their payment costs across the board, including gateway fees, processor fees, and especially interchange fees by optimizing your payment routing. But in addition to that, we really look at the entire payments value chain to provide insight to your current payment arrangements and how to leverage those to your benefit to not only optimize your interchange and costing, but to also increase approval rates, reduce your fraud and chargebacks, and essentially improve efficiencies across the board. And at the end of the day, what this allows you to do is keep more of the money that you've earned through your business. So some of the ways that we tactically deliver results to our clients is that we can negotiate for you and beside you with your payment processors, point of sale integrators, gateway providers, and in some cases even the network and the debit brands to get you the lowest cost possible. We can work with you to define the routing solutions to make sure that you're capturing the PIN and PINless debit rates that are available to your organization. We analyze and audit both before and after, meaning that we analyze the current situation and provide recommendations for process improvement and cost saving efficiencies. And then we can provide ongoing audit to make sure that you're achieving the results that you desire. Adaptation is really how we look at the current environment and address any deficiencies that are leading to increased costs. And this dovetails into training, because oftentimes employee training issues are what cause problems with interchange and cost downgrades that we can assist with. And then lastly, reporting and analytics. So we can actually assist with establishing a process and a relationship with your processor to make sure that you're receiving the data that you need to ensure that your systems and reporting are in place to optimize your cost savings. Relative to how we operate, we really do take a customized approach to each customer. Each one is unique, and we customize the engagement for each merchant type that we're working with. We really do represent you and operate on your behalf, and we make recommendations and negotiate terms that are to your benefit. So some of the ways that we actually do that operationally, we really start with analyzing the current pricing, analyzing your current interchange levels, and that usually shows us some pretty clearly defined areas of opportunity, at which point we can begin an action plan to negotiate new pricing, implement process or product changes that may be necessary to capture lower fees. We implement ongoing monitoring and audit both the initial engagement results and then the ongoing results to make sure that you're achieving your goals. And ultimately, that's what will reduce your payment costs and improve your operational efficiencies. The core approach that we take on each engagement starts with understanding that there's typically not a need to change payment processors. On occasion, you may need to or want to, but by and large, we can improve efficiencies and negotiate better terms with your current processor without a need to actually switch. Our program doesn't call for any upfront fees or application fees, and you don't pay us unless we save you money. We promise transparency, honesty, integrity, and simplicity. We'll walk you through the process each step of the way. And again, you don't pay us unless we save you money. So there's really no risk in reaching out to us to see what Trucera can do to help. As we get closer to wrapping up here, I just wanted to share some payment volume numbers with you. If we look at 2006 through projected into 2020, you can see the tremendous growth of the credit and debit payment volume, both transactionally and in dollar value. This is an issue that will continue to be forefront for merchants, and managing the complexity and the cost of payments will become increasingly important. In closing, I would encourage you to act today. Electronic payments are growing, as we showed on the previous slide. The volumes, the transactions, the costs, the complexities will all continue to rise. Trucera can help. So get in touch with us today. There's literally no risk. We do operate under the Truth in Payments tagline, and we believe that every day. If you reach out to us, if we can help you, we will. And if we can't help you, we will tell you that as well. So get in touch with us today. Whatever you may need within the payments business, whether that's the cost reduction and optimization that we've talked about here on today's webinar, if you need assistance with other point of sale technology or working with other providers, get in touch with us, 678-909-9834, or you can send an email to future@trucera.com. We're also online and on Facebook. Reach out to us and we'll be happy to speak with you. If we can help, we will let you know. If you would like to get in touch with me directly, you can reach me at 865-693-1231 or jeremy.crawl@trucera.com. Also, feel free to send me an invite on LinkedIn if you would like to connect there. On behalf of the Trucera team, I want to thank you for joining us here today. Hope you found the information helpful, and I will look forward to the opportunity for Trucera to work with your company in the future.